15 years in this business, thousands of loans reviewed, and I still had a moment last year where I looked at a loan estimate and said out loud, "What the heck is this?" I'm going to show you that number in a second, but first, American homeowners over 62 are sitting on $14.5 trillion in home equity, and most of them will never touch it. Not because they can't, because nobody told them the truth about how it works. My name is Jay Zayer. I've been a reverse mortgage professional for 15 years. I didn't make this video to sell you anything. I made it because most people are making decisions or avoiding decisions based on information that is completely wrong. Here are the 3 biggest myths. Number 1, the bank takes your house. Not true. You keep your name on the deed. You keep ownership. You can sell whenever you want. A reverse mortgage is a loan, just like any other mortgage, except no monthly payments are required. The loan becomes due when you sell, permanently move out, or pass away. 3 triggers, all under your control. And here's the part almost nobody hears. It is non-recourse. If the loan balance ever grows larger than your home's value, you and your heirs owe nothing beyond the home itself, not a single dollar more. Your kids do not inherit your debt. That protection has been federal law since 1988. Number 2, it's only for people who are broke. Not true. The borrowers who get the most benefit are people with significant home equity and solid retirement income, using this as a strategic planning tool, not a lifeline. Here is something that will change how you think about retirement. The reverse mortgage line of credit grows over time. At current rates, approximately 7% per year, guaranteed, regardless of what happens to home values. Here's an example. A $200,000 line of credit at age 68 grows to approximately $370,000 by age 78. Without drawing a single dollar, no stock market risk, no investment decisions. That is a retirement safety net that gets bigger every year you don't need it. The people who benefit most from that are not broke. They are planning ahead. Number 3, the fees are very high. Not true. Fees exist. On the federally insured HECM, the standard reverse mortgage, origination fees are capped at $6,000, set by law since 2009. But there is a second type of reverse mortgage, a proprietary reverse mortgage, which is not FHA insured. These reverse mortgage options can be very helpful, as they can help in many cases when an FHA reverse mortgage can't. However, these loans have no federal fee cap, which brings me to the number. A woman called me. Her daughter asked her to get a second opinion before signing. She had already done everything, found an advisor, completed her application, was days away from closing. She called me as a favor to her daughter. I reviewed her loan estimate, and although it was technically legal, she was being charged a $42,000 origination fee. Thanks to her daughter, she did not close that loan. She closed with me instead. She saved over $40,000, all because of one extra phone call. So please make sure and get more than one quote, every time, no exceptions. If you refinance when rates were down in the 3s and don't want to give up that rate, there is now a product called a reverse second mortgage. It sits behind your existing loan without replacing it. No monthly payment on the second. Your low rate stays exactly as it is. You access equity, and that equity goes into a growing line of credit. The home equity you have been ignoring is not just sitting there. It is one of the most powerful retirement planning tools available. The question is whether you have the right information to use it. I built www.reversemortgage.coach so you can get honest answers before talking to anyone, including me. Free calculator and a free assessment tool. Once you determine if it's something you wish to explore further, you can call me for a no-cost informational call. Just real numbers for your real situation. I'm Jay Zayer. Thanks for watching.